On October 10, 2025, the global markets froze as President Donald Trump announced a stunning 100% tariff on all Chinese imports. A move that, as Bloomberg called it, the most aggressive economic escalation of the decade. This wasn't just another policy shift. It was a direct retaliation against Beijing's latest export restrictions on rare earth elements, the minerals that power semiconductors, EV batteries, and AI chips. According to the Financial Times, China controls roughly 70% of the world's rare earth supply and nearly 90% of its processing capacity. And its new rule now requires export licenses, even for trace amounts in finished products. Within hours of Trump's announcement, Wall Street reacted violently. The Wall Street Journal reported the Nasdaq tumbling 3.5%, Apple losing nearly 6%, Nvidia down 7%, and AMD falling more than 5% as billions were wiped from US tech valuations in a single trading day. Analysts from Bloomberg Economics estimated that this single tariff hike could add at least $3.6 billion in new taxes on last year's import levels, while Goldman Sachs called it a supply shock to America's technology backbone. The reality is that these tariffs are not paid by China. They're effectively taxes on American companies and consumers. According to the Consumer Technology Association, the US tech industry depends on China for 60% of semiconductor materials, 90% of rare earth processing, and around 80% of hardware assembly, making this one of the most interconnected and vulnerable sectors in the world. Take Apple, for instance. Nearly 90% of iPhones are assembled in China, and Forbes Tech projects that the 100% tariff could raise the retail price of an iPhone 16 Pro Max from $1,200 to over $1,800. Reuters estimates that Nvidia and AMD could lose between 10 to 15 billion in revenue due to reduced chip material supply and restricted AI hardware sales to China. Intel and Qualcomm are facing similar setbacks, with their supply chain still tied to Chinese factories despite the ongoing expansion of domestic manufacturing through the $52 billion CHIPS Act. But those US fabs won't come online until 2027. Microsoft and Google, though more cloud-based, rely heavily on Nvidia's AI GPUs, meaning even their data infrastructure costs could spike by 30 to 40% in the coming months. For consumers, this all translates into painful price hikes. The Tax Foundation predicts that tariffs could act like a $1,000 to $300 annual tax per household, while the CTA warns of up to 50% price increases on laptops, 30% on smartphones, and double-digit rises on every electronic device that uses imported chips or rare earth components. Ford and General Motors have already hinted at slowing their EV production due to mineral shortages, while the New York Times reported that the Pentagon is assessing risks to defense contractors who depend on Chinese magnets and battery components. The supply crunch could extend from your smartphone all the way to US fighter jet manufacturing. Meanwhile, China has started hitting back. The South China Morning Post confirmed that Beijing has launched retaliatory investigations into US firms like Qualcomm and Tesla, while quietly imposing new port fees and customs checks on American-managed shipping lines. This mirrors April's escalation, when China slapped 84% tariffs on US agricultural goods, devastating soybean and corn farmers in the Midwest. And Trump's rhetoric doesn't stop with China. During his October rally, he warned of extending similar 100% tariffs on BRICS nations undermining the dollar, signaling a potential multi-front trade confrontation. The Peterson Institute for International Economics warns this could isolate US tech exports and trigger a domino effect across the global economy. Yet, supporters argue that this is exactly what America needs, a painful but necessary reset. The White House cites Trump's first-term tariffs from 2018 to 2020, which spurred over $200 billion in new manufacturing investments. And indeed, Fox Business reports that companies like TSMC, Samsung, and Intel are expanding chip production in Arizona and Texas, seeking to escape the Chinese dependency trap. Still, experts at the OECD caution that reshoring could take at least 3 to 5 years and cost twice as much as current global supply chains. Until then, the US tech sector will be paying a steep price: higher costs, slower innovation, and fractured international research collaboration, particularly in AI development. The decoupling of the world's two largest tech powers, the United States and China, is no longer a theory. It's happening in real time, and every consumer, investor, and engineer will feel it. The question now isn't just whether America can live without Chinese imports, but whether the global tech ecosystem can survive this divorce without collapsing into two rival technological worlds. As Bloomberg Intelligence summarized, Trump's tariffs might build a stronger America, but they'll break the global circuit that made American innovation possible. The next generation of semiconductors, AI breakthroughs, and consumer electronics will be shaped not just by innovation, but by politics, tariffs, and survival strategies. And as this new tech war unfolds, one thing is clear: the battle for silicon supremacy has officially begun.